It's Friday, ladies and gentlemen. This is Crypto and Coffee with the Trading Bros. I'm your host, Clutch Crypto. B. Wellington's on the chart.
What's going on,
Hey,
baby?
we've uh, we've had some downside. We're working on some upside. We open in 7 minutes. What do you guys think is going to happen? Is there a bull
We're gonna
trap?
keep
Is
it.
there a bull
Yeah, I
trap
mean,
coming?
look, bull trap's definitely a possibility, and probably more than not. We're a show that we talk about probabilities and patterns, and kind of what we've seen from watching this market, uh, and then mixing a little bit of this macro flavor. But look, chart don't lie, baby. we we've had this setup coming for a minute. We had anticipated maybe a little bit of a pump up here, but and looking at some of the things like we look at, high block, book map, funding rates, things of that nature. Man, just people are constantly buying this dip. They're looking at these coins as being cheaper, versus looking at them as a base case against kind of the macro environment. So it's going to be very interesting. We've had a couple of days in which we've had some decoupling, but not too much. So that'll be interesting. But we're in the same boat. So we've come down here. We've kind of rested in the 1750s to 1800 area. We've been kind of ranging there all morning. We've reached the bottom of this peak here. Just be careful. There's a couple things that's going to happen. I know there's only two things that can happen, but when we break this
And it's
peak
either going to
here,
rain or it's not.
I mean, when we break this peak here, it's going to be this last low. It's going to be a massacre if we get through this thing, because normally the way these patterns work out is that this kind of does another secondary dump because people are buying at this level because here's really what technical traders will tell you. You come down, you test the support, which we've got support here. You come back up, you test it again. People are rebuying this area, because that second hit. So it wouldn't surprise me if the bull trap started from here, because that would make most sense in order to trap a lot of these folks. But since people are already long, you don't need to trap them, and therefore this secondary movement may not be as high as what you would anticipate. I mean, we had this kind of the secondary movement, here and then brought back down. So you got to be careful. We've been looking at some different things. 50% to 60% retracements on a secondary reaction is not out of the question. If you're looking at 60%, I mean, you're almost getting back up to, I'm gonna excite you right now, but you'd almost get up to that CME that we never came back to, right? That would be a great retracement.
We're going to
And
come back to it.
and it would be normal if this doesn't break down into this area. I would imagine you've got all these major EMAs to come through. You've got the 800, you've got the 50, and you've got the 200 to get through on the daily. That is damn near a month's worth of.
Well, on a micro scale, when you're looking at that daily, if you go back to it real quick, normally what kind of happens is the EMAs are going to, so you have all the EMAs there on the chart. The 50's on its way down to the 800. Normally you get a bounce, but like you mentioned, those have to get close together, and for them to get close together only means one thing, right? This baby needs to keep coming down. I have some interesting things to show you on Bookmap here shortly too as well.
Has been talking to you all morning, so. But
Huh?
it's been talking. Bookmap's been talking to you all morning. You've
I
had a
know. Oh my
special
gosh.
relate.
We're at
Special
technical
relationship.
difficulties.
Special relationship. Don't look at all my lines. They'll give you a fucking headache. But look, but they're all necessary. So we've had this vector candle that came in here. Even though it was a vector candle, I mean the volume is good, but it wasn't like great volume, and so we've come down here. We've got these peaks here. We've taken out this peak, and so this reaction is normal. From here, We've had these EMAs that have crossed. This is a nice area in which you could, you can take a long, because generally when they cross and stay, right, we have to see if we've got another 30 minutes and the market's about to open. But it wouldn't surprise me if we got back up to this 50 EMA, which would be past the daily open. It would also be at this pivot point, at 1858. And if it does get up there, and depending on what kind of reaction we get from the liquidity that's out there, we also have the 800 EMA on the 1 hour, which is at that 1956 area. And so this is, you look at these charts, and yesterday's high is way up here at 1976. So this fall here, we could easily come back up into this area because we've been here before. And that would take out a lot of shorts depending on what they are, and building a lot of those longs, because we do have, we'll just go over to some of the liquidity side. Let's see, we like to always look at the
Okay, we're playing ball now.
open interest. We've got $4.7 billion, a little bit on the low end relative to OI historically, but we haven't gotten to the lows that are out there. If we look at things like funding rate, which we just use as kind of a sentiment provider, we're kind of mixed across the board. Well, not really. We're kind of mixed across the board. We've got BitMEX, Bybit, FTX. These are three major exchanges. Binance looks like they're turning positive. I never know how to say this one. OKX seems to be a whale. Kraken has been
Negative.
Well, they've been going against the trend relative to the funding rate, so all that looks positive. All that looks positive for it going down. But we've got Dow's open now. We're opening with a bump. NASDAQ in particular is moving forward. Some of those technology stocks. We've got Bitcoin that's kind of lagging, and oil at 113. Wow, oil's just hanging up there, man. Really hasn't been in the news. I mean, it has with gas prices. You've got gas prices soared to new highs, eroding demand. We're getting into the summer months, right? These are the months in which people normally want to drive and take vacations, and so we've got historically high prices there. Go ahead, you got a smile on your face.
Yeah, I want to add something to the show that we can do on a morning basis, because I think it will be fun. So yesterday I saw on Market Watch, there was an article that talked about the decoupling that we like to talk about, but it says not the decoupling that crypto wanted, which was referencing that crypto was dropping while the stock market was starting to see an uptrend. But we're going to start something on this show called Conspiracy Theory Conversations. Do you think that crypto, they're getting all the liquidity, they drop crypto only for when the stock market does go into a recession, because it's going off of a pump right now, a bounce per se, that all that money that they'll be taking out of the stock market is what's going to pump crypto up? Isn't this a fun conversation?
Yeah, we've talked. We've kind of talked about this before. Yesterday we talked about, not buying the narrative that you've got to. So I'll tell you my theory on it. Actually, I got into a little bit of a tweet argument with a guy, but
oh yes,
I'm like, look, no, but one day of decoupling, okay, like. You gotta imagine that with the amount of people that, the amount of downside that we've had so far, that a lot of these are going, you got a lot of folks that are larger holders, whales that are out there. And, FTX, is one of them that, they have a good amount. And if they work in coordination, they can influence the narrative of decoupling. So whether the money is coming in or if it's coming out, if it's going out of stocks, coming into crypto, they can manipulate the market to make it seem that way on paper, so that people can come in and say, oh, it's decoupling. So then when they say, okay, it's fully decoupled, right, then you can then they can drop the price on them as retail buys into it, because retail is stupid, right? Because the money that's coming out of the market, if you're not paying attention to things like the bond market, if you're not paying attention to market cap increases relative to crypto, and looking at some of the size that's coming in, if you're not doing those types of things, then you really don't know what's going on. And so, we don't talk much about the bond market here, but the bond market is starting to recover more than it was before. SPX and NASDAQ, I've been kind of looking more at the SPX, the S&P, as well. But yeah, I mean, to me, it looks like a setup. It looks like a setup because crypto. Are you going to tell me that crypto is a risk-off asset? I mean, crypto is one of the riskiest assets that are out there. And so if you're going to tell me it's going to decouple, I don't buy it. Maybe it's leading more, maybe it's a leading indicator to the market. So, and maybe that leading indicator is getting a little bit longer. But again, we've had a lot of liquidity in the market. All that liquidity is being taken out of. The Fed's taking it out of the entire financial market. Where it's going to come out first, to me, I believe it's in crypto. Look, we've got a lot of news that's coming out today as well. PC inflation, and let's see here. So PC inflation, which I will admittedly don't fucking know what PC inflation is. Consumer spending climbed sharply again, and not just because of inflation, right? Rising incomes partly cushion American. Yeah, I mean, all this is going to change. Everybody's talking about income and things of that nature. PC year over year looks like it's in control. Core PCE, I just don't know. I guess producer, consumer. I'm not
sure.
I'm not even going to fucking pretend to know. This is what we do. We get in here and we take a look at what's going on. What's giving America a so they're saying, I mean, I don't know. Are incomes really rising at that rate? And if the stock market starts to come down like it's really coming down, then, are those increases in wages going to sustain, and all those increases in wages on par with inflation, right? So I guess here we have nominal consumer spending. We could have to, here in the middle of the show, we got to upgrade. Nominal personal expense is down. Anyway, we're coming up to it. What do you got?
Okay, let's check it out. I'll show you what I got. I have some cool stuff, actually. I think, maybe.
Got 10 minutes to get it.
We got to easy. I mean, we can get through this in a problem. Easy 10 minutes. Okay, all right. So this is High Block Capital. As you can see, we're really down into on the negative side with negative 4.3 billion. So there's a lot of short liquidations that are above us. There's a really, really big one. We talked about it on the show yesterday. We were, kind of expecting that we might get into that price range, but didn't happen. 1928 is a $106 million liquidation that is yet to be gotten to. So do anticipate that could be out there on the books today. Also, do keep in mind there is a 3-day holiday for the U.S. traders. Stock market's not going to be open on Monday coming up. So they may leave it up to retail to try to pump this up over the weekend. I'm not sure yet. Let's see what happens today. Because as of right now, we still don't have a clear direction on which way we're moving at since the market opened 8 minutes ago. So we're currently trading around right around 1800 right now. And we have a peak that we need to get above, which would be around 1824. If we can break above that, can expect some continuation up to the upside. However, we start breaking below 1794, then we might have some more moves to the downside. Let's take a look about this exciting news that I mentioned that I had based on Bookmap, because you guys are going to want to know this. So as you can see right now, we're trading kind of right on the upper end of our chart volume profile right now. We do have some orders here. It's probably going to get filled here at 1815. Let's see if we get a reversal up here at 1821. And then we also have some orders down here at 1800 that need to get picked up. So there's going to be some ranging, some choppiness going on here probably for the next, 10 to 20 minutes. I'm sure why these orders are getting set up. However, what I wanted to point out to you guys as I'm scrolling out here, so the session that started yesterday, we had a big, heavy long-term liquidity that showed up down here in this $1,200 range. And that was pretty heavy. There's still quite a bit of long-term liquidity down here. So this would be more in the $1,300 range, but it's still there. So, and there's a lot of orders down there. So do keep in mind, if we start going down and we start going down very quickly, there's only a few areas that currently right now are set up to stop us. You have 1,700. You have a little bit at 1,600, and then nothing significant really until we start getting down here into 1,300 and 1,260, where there's just a shit ton of orders. Excuse my French here, but if we start heading down, like you mentioned earlier on the show, if we start heading down, it's probably going to be a very quick, gut-wrenching move, and we're flirting with it right now.
Oh, well, that's what's up.
Yes.
I like gut-wrenching
Yes.
moves to the downside to clear out so that we can continue to move to the upside.
Yeah. So, but that upside might come first. So, like I said, there's not a super clear direction right now on the market maker's intent for the day. I think we're going to know here once we break out of this 1800 to 1820 range. Once we get moving out of one of those directions, I think it's going to paint a clear picture. But with orders set up the way that they are, it's really trappy.
Get on the trap. Yeah, no, I would agree with that, but I do think, we've come back to that wick. If we're going to have a reaction, a secondary reaction relative to move to the upside, it's got to come now. And so we're kind of already in that. It would make a whole lot of sense going into the weekend for us to pump, get people excited about it, reading the news over the weekend, coming back and seeing, ETH over 2,000. That'll get people excited again and get people buying. For the next leg down, right? You got for legs down, you got to have liquidity in this. You got to build liquidity.
Absolutely.
Let them build the liquidity, and then we'll take it. We'll take it later. Thank you. Gracias.
Yeah. Muchas gracias. All right, guys, that's all we have for today. Pay attention to those ranges. Looks like we're working down here towards the bottom of this 1800 range that I was speaking about. There's a lot of orders to get picked up here, right here at 1801. We'll see you guys on Tuesday. We won't be here Monday because we're going to be enjoying the festivities of the American-made dream here, right here on Memorial Day. Thank you for all the soldiers and everyone that have contributed to help us be able to have this holiday, and we really appreciate it.
To play with tokens on our computers. Thank you.
All right.